Hey everyone, what's up? This is Mozart speaking. As long as the price is consolidating, in the same range that I mentioned yesterday. I'd even say, not just in the range, but right in the center of that range. The consolidation range is going to be much wider, and today you'll learn more about it. I'd like to take a look at what's happening in the blockchain. This is one of your favorite sections that I am showing. I don't do it often because it takes a lot of time to prepare all this data. But today is one of those days when I would like to delve a little deeper and see whose side the ball is on right now. Still on the bull's side, or have the bears started to take control already? Today's overview will be about the blockchain. Small, but very deep. So, even deeper than you think. In short, let's get started. Understanding what's going on in the blockchain doesn't give us some kind of magic money button or anything else. It actually shows the current state of the price. But in a deeper understanding, it reveals how it got there, the way it got there, why it got there, and what the chances are that it will stay at this level. They will go higher or lower, it works. Blockchain analytics is quite good, especially good. It works in the medium-term range. Long-term prospects do not always work, that is, according to my observations. About 45 positive signals, that is, there is one wrong one. Well, it's not even a matter of what's wrong, and here, again, the probability of this or that event is assessed. It happens that with one increased probability, another probability is triggered, as, for example, happened with us in February. But here, the reason is simple. That is, neither blockchain, nor charts, nor any analysts, none of them can predict any unexpected events. Whether it's the coronavirus, for example, as an example, simply, whether it's the beginning of some wars, or whether it's the beginning of the uncertain policies of the Trump administration and Trump himself, who, for example, yesterday, says I'm going to impose additional sanctions on Canada, raised to 50%, and 3 hours later says, well, maybe not. Maybe I won't raise them. Then tomorrow he says, yes, no, you misunderstood me, I'll raise you. And then some guy from Ontario calls him and says, let's make a deal. Well, it seems like I won't raise them after all. And, against this backdrop, the markets start reacting unpredictably because they're not used to this kind of thing. They're used to a certain clear policy from the administration of the president, and in general, from the largest economy in the world. And here he's all over the place, and the markets have no idea what he actually wants. What is he getting at? That's one side of it. On the other hand, it seems he even refuses to say that the economy will not go into recession, America's economy. His advisors are also saying today, for example, that if the economy goes into recession, it's not that big of a deal, compared to the long-term profits from imposing tariffs. How the markets are supposed to interpret that is also unclear. What do they want? To deliberately push it into a recession just to fire up the printing press? Or what? What do they need to fix? An hour of profit or later? There's a lot of uncertainties, and moments like these can break any structures. They seem to work out, long-term, fractally, very often, and very consistently. That happens. And we need to take into account what has happened, and we need to consider where we currently stand. And let's take a look at what's happening right now. I really didn't want to show this chart, for example. It's just a digit that shows where Bitcoin is in relation to its 50-day moving average. Regular CM and simple Moulin, cover and moving average. If we see a downward deviation, it's below that line, and the lower it goes, the more days it spends above it, respectively. That is, statistically, again, taking into account the entire history of Bitcoin trading, the boundary between the bear and bull markets was at the 50-day mark. So those red lines at the bottom mean that the market tended to shift to a bear market more often if the price stayed below the 50-day moving average for more than 50 days. That is, at the moment we have been there for 36 days, today 37. For example, there was a change in the bear market. That was the 21st transition to 22nd year. We stayed there for 80 days. Then the same thing works and, vice versa, the transition from bearish to bullish example. As, in January-March, 57 days we entered the bull market, we're at 50. Moving. It works well, so we need to keep an eye on it. We definitely have a couple of weeks, maybe 2 or 3, to figure things out and make some decisions about how to move forward. Next, something interesting, this metric I showed you. I also shared it in the Telegram channel. This is a useful metric for Bitcoin, the post-basis distribution it shows. Over here on the right, you can see the colors. In short, if anyone doesn't remember what I was talking about, usually not many people do, so I have to repeat myself 100 times. The higher, the brighter and hotter, so to speak, the color, there's more accumulation at the current levels. The colder it gets, like in this blue-purple zone, the less accumulation there is at those levels. So we have what's called a heat map. The heat map, let's open it up wider for the past year. Let's take it like this. So over the past year, we can see that we have levels. And for instance, in March 2024, there are peaks. So, these recent peaks show that we have certain periods of accumulation structure. It was around 96,000, and we lost it, fell off from there. And here, the nearest strong accumulation level starts around the mark of about $74,000. So, there are about 1, 2, 3 of those nearest levels. Plus there are some increasing accumulation levels as well. I wrote about this in Telegram. How do they work? So here we have a gap. There's a hole here, and the nearest significant accumulation level is located here. So here, it's even below the current prices, even lower than the $76,500 we saw the day before yesterday. This is around the $74,000 mark, roughly the closest. The very nearest one that isn't too close to the accumulation level. This is what's going on here. This is a hole. This is a hole where little was traded. We slipped through after Trump won. This distance is very quick. Nobody had the chance to trade or accumulate anything here, and so on. Therefore, the probability of closing this hole, given that we have penetrated it and are already trading part of it, the likelihood of closing this gap is quite high right now. And moreover, if we move deeper right here, we will see that in the current range right at the current price, despite the fact that we have already fallen there to 76.77. For now, there are no signs of any significant accumulation or serious buying back, and obviously, it's not visible on the chart. There's no shift from selling dominance to buying here. The tones here are still cold, nothing warms up or brightens. Here, we are in a range that is gradually tightening from the top, where sales begin, and from the bottom, where purchases start. But this range is narrowing down to a certain density. So, basically, from the top, right now, we have resistance around $87,000 to $88,000, roughly like that. And the lower support is starting somewhere around here, 74 to 73, that's the closest one. Here's the range. Which ones are we stuck in? Therefore, the probability of going further in this range is also possible, given that there is currently no particular reaction and the lightning of colors is very high. Therefore, the probability that we will eventually touch 74 and maybe even 73 still remains high, unfortunately, considering the events that have already happened and where the price has already reached. This is very specific. According to the densities, on the heat map, this chart shows that liquidity is currently leaving the market. How does that look? There's the price, that black line right there, and there are two moving averages, so to speak. It's just like this, and red, the upper moving average, the fast one. This is what's called the realized price for super short-term holders who keep Bitcoin in their wallets for anywhere from 1 week to 1 month. That is, this is really fresh money that has just entered the market on promises. And on the likelihood that everything will shoot up even higher, right up to $200,000, somewhere around there. The lower end is the average cohort, so to speak, the average level of short-term holders who keep their Bitcoins for 1 to 3 months. So, making money here is really straightforward. As soon as the fast moving average crosses the slow one, we see an increase in the inflow of money into the crypto market. This is the realized price. The realized price only increases when Bitcoin is being bought, and it drops when it's sold. And on the flip side, when we drop down, we're seeing selling pressure and liquidity leaving the market right now. This care has been going on since about February 23rd, 2015, and the care has been going on quite intensively. If we look at how it was in the same 24th year, there was a similar structure. This is the start of the outflow after the Iranian attack on Israel. Then we went into a wide sideways market and kept pushing through, still pushing through. That was a long time, a very, very long structure. We've gone pretty deep based on the two moving averages, kind of like we are now. In fact, we've probably gone even deeper now than we did back in May 2024. The same can be seen in the overall, aggregated, realized, general, to the aggregated, realized change in net position in the markets. It's complicated stuff, to put it simply. In general, liquidity in the markets goes away or comes. Right now, it's almost at zero over the last 30 days. Only about $5 billion of fresh liquidity has come into the market. This takes into account everything, inflows into Ethereum, Bitcoin, stablecoins, and money printing. Mainly due to stablecoins. For now, we're holding on to Bitcoin and Ethereum, but there are clean outflows here. And here's the global chart below. Zero. We haven't dropped if the chart falls below. Zero. It stays there for a while. It's a transition to a bear market. Even in the summer of 2024, that chart didn't drop below. Zero. It went below. Zero. In 2022, after the Chinese ban on mining. Right here. For a short time, about a month and some change, it dropped below. Zero. But back then, there was a more serious and understandable reason for the hit to the crypto market than what we're seeing now. Then we dropped again, and that drop marked the transition into a prolonged bear market. We're holding on for now, but we're already close to zero. So yesterday, I did a review where I showed that the current levels, or ones close to them, are critical to transition into a bear market. This chart shows the total capital inflows into the market. That confirms it. The next metric is also one of my favorites in this context. Boundaries. When we determine the transition from a bull market to a bear market, or vice versa, that's the SOPR metric. Specifically, we'll take a look at it for short-term holders. SOPR stands for Spend Output Profit Ratio, or however you want to call it. This is the metric that shows. I took it at 7 days and smoothed it out to remove noise. Because if I don't smooth it out, it looks like this. Let's smooth out the noise, it's clearer that way. Shows how they're currently selling the card. Short-term holders mainly, well, in this case, over the last 7 days, whether they're making a profit or a loss. So right now, the SOPR metric has dropped below 1 and has fallen to about 0.98, 0.97. This is a deep fall, a deep enough fall that it is now comparable to a fall. Here, that is, the first failure. This is April-May. We have already gone deeper. We compared with the July decline. This is where we came to a deep fall. As a rule, after such falls, rebounds are observed. Now, in principle, it has started, some even passed, some kind of rebound was 76. 83,500, well yes, 7,500 is almost there. There were already almost normal percentages. The rebound may go higher. Let me remind you, the gap is 87, but for now this will not mean anything. Typically, this drop is followed by further consolidation. More specifically, this is a rebound before further consolidation. It will happen, because as soon as we drop down here, we might start moving around like we did back in the summer-fall of 2024. Up and down, up and down. So, it's a long, wide sideways movement. The first option, and the second option. This is a bear market record. Here's another deep drop. We walk, we bounce. Maybe we won't even go above zero. And that's it. We head into a bear market. And then we just keep going down. Two options. There might be a buyback, but it happens less often. In situations like this. That is, for example, how it was. After the Chinese ban, we fell really deep, like really deep here. It's not even here. It was. We moved around a bit, but there was a clear reason for that. At that time, the Nasdaq was rising while crypto was falling. And now everything's falling, both crypto and the Nasdaq. It's not quite the same situation as it was in 2021. We moved around for a bit, and then suddenly, something happened. All the markets started to rise again. They weren't falling, and neither was Bitcoin. He joined them again. It seems like they managed to sweat out that Chinese ban. The miners adjusted and went wherever they wanted, and then everything just took off. This happened later in the growth. But this was not the case. That is, the situation then was different from the general market. Right now, it's moving in sync with the broader market. We've already fallen deep, and it doesn't just end like that. We need to trade through this and find a way out. The balance that hasn't been found yet is definitely still missing. Not enough. Time has passed for that balance to be found. And this metric shows a more detailed picture and combines the previous metric, specifically for short-term holders. But here we're also adjusting for the entities and adding an indicator like sitting and coin days destroyed. We're adding, like, 2 indicators in one. We're making an adjustment for it. CDD shows activity. In short, the rate of destruction of so-called coins and days. In almost every review, in a global sense about blockchain, I talk about the CDD metric. Let me not say what it is. This is, roughly speaking, the volume of coins multiplied by the time they are held. The higher this is, the more significant its impact on the market. So, based on this metric and considering the current decrease in the coefficient of resistance, the strength of panic now is approximately comparable to the strength of panic that was observed at the beginning of August. And I think everyone remembers that date in 2024. The level of panic has brought us back to about the same point, with selling pressure and market sentiment. It's even a bit stronger than it was in July and way more intense than right after the Iranian attack. The combined selling pressure and the number of destroyed coins and days. So, the overall loss for short-term holders matches that of August 2024. So, there's really strong pressure. Short-term holders. Right now, everyone is at a loss. Everyone is at a loss. You can see that from the overall SOP indicator. Well, almost everyone is at a loss, because short-term holders might include those who managed to buy yesterday at $76,000. Yeah, and right now they're in profit, but looking at it globally over 155 days, that's the short-term holders. Almost all of them are at a loss, so maybe about 15 to 17%. Right now, only a few of them are still in profit. The very last ones who bought their coins in the last 2 or 3 days are the only ones still in profit. And this is, again, a borderline situation. It's the same thing I said earlier. The market continues to find its balance. It might bounce back, or it could drop further down for a while. Somewhere, he will have to find the boundaries of the range from which he will then decide where he will go. Now we have only just reached this border. We've just gotten to it. And I believe that some time needs to pass before the market figures out where it wants to go. And the last metric is the STH, bands. Accordingly, the average purchase price for all short-term traders is the average blue line. Right now, it's about $91,600. On average, for all short-term traders, I repeat, it was a strong support line until February 25th, it held. We broke out of it. We broke out of it. And now the range is expanding for us. We have a range that is capped at the top. About this price up top, and at the bottom, the price of maximum pain, so to speak. So that's the low band level, one standard deviation below the average purchase price for all short-term traders right now is this mark, and it's within the range. About $70,000 to $72,000, on average 70. For every $1,000, that's the level of maximum pain. We reached that mark in August 2024. We literally just tapped it, and with the quickest return, we tapped it. And during the strongest corrections, the probability of reaching this mark increases significantly. It is not 100%. Sometimes we avoid reaching the level of maximum pain, but the probability of reaching the $70,000 level is higher now. That's why I warned you. Keep this number in mind, and if you're already buying on spot, you can do it now. I have already spoken about this. Keep in mind that what will be added there will be good for this mark, but again, not the entire deposit, not the entire volume. Because if this transitions into a bear market, and I think even if it does, it won't be as stretched out and long as it usually is, since all the cycles have already broken down. You might even be able to buy even lower on the dip. The current state looks like July. So, right here. Right now, there might be some kind of correction around the average purchase price. Well, in our case, it's about 87 to 88. Maybe we'll tap up to $90,000, for example. And then we'll define that range, consolidation within the range. Right now, there's a high probability that this will happen. Can we go lower from here? We can. Now, yes, without bouncing back, right? Because Trump, again, we see the uncertainty of what he does. We see that his administration is even willing to allow a recession in the markets, and the risks are increasing. So, now, I'm not in a position. I don't know what to do right now. Right now, we're at some kind of center level, the center of a wide range, where we can go both up and down. I want to do something at its boundaries. So, I want to buy from the lower boundary of this range. And the lower boundary for me starts at around 70 up to $1,000. That's where I'd like to buy. Upper limit, if I buy at the bottom, it is 87 to 90. That's where I'd like to sell. Roughly, right now, it's around 81 in the range of 83. I don't know what to do because right now, it's really 50 to 50. And the charts that I'm showing you, this is what I see. This is confirmed. We have an outflow of liquidity. We have lost some values. In the average purchase price of short-term contracts, we have levels of past maximum pain, after which the statistical market behaves most uncertainly. For some time in the range, and it's better to trade from the boundaries of the range rather than constantly being in the market. And all these factors put some limitations on me. I can't do anything. Anyway, if you're following along with me, just check out the Telegram channel. The link to it is in the description below this video. As soon as I decide to get back into a position, it might even be a short now, but for now, it's a long. As long as we're above the annual average. Shorts. I'm not really considering my trading system rules as a whole. I'll write when I get back into a long position. If it's easier for you, if this information is just entertainment content for you, and you didn't really understand much of it, but if you found it interesting and want me to keep doing these kinds of blockchain reviews sometimes, give this video a like so I know I'm not wasting my time. Thanks everyone, have a great day. This was Mozart, and see you later.